There are so many things to consider when you're buying a home, and you want to consider, does it make sense to buy? Does it make sense to buy right now? How much should I put down? What's the real value financially over the time I want to own the home, right? You've got financial goals, you got your plans for the home. And so there's some important questions, and I want to talk to you and share some ideas that may help fill in some gaps in your perspective, or at least give you some different ways to look at it, because most of us grew up in from advice that was very relevant pre 1971, right? That's when we were on the gold standard and we had defined benefit plans. Now we are a currency and we have defined contributions since Nixon took us off the gold standard in the early 70s. Because of that, there are some different strategies we need to deploy. And most of us still are taught from that old mindset that doesn't really work as well in this type of market. So look at a couple of things. One, your home, yes, the home loan is a debt, right? A tax beneficial debt that can be leveraged and used as a financial instrument to help create wealth. But today we're going to look at it, particularly the leveraged piece of this, which you could look at as an investment, right? And so let's talk about this, because I want to help you think through some ideas before you go buy a home, to do the numbers and find out what's the best down payment for you, what's the best structure for you, and hopefully that'll help conversations with us or whomever you work with, and help you feel confident and have peace of mind about the decision you make on how much you buy, when you buy, and how much you put for your initial investment. So your home is a leveraged investment. Here's an example. If you put, let's say, 50,000 in the stock market, and on your good years, you're earning 8 to 10%, right? And I know right now you may not be earning that, right? Probably losing a little bit of money when I'm recording this video. But for averages, let's say 8 to 10% a year, financial advisors use 6%, but we'll be generous. You're getting that 8 to 10% on the $50,000. Let's say it's 10%, that's $5,000 a year on the 50,000. When you use that same money, $50,000 on, let's say, a $500,000 home, you get 4 to 6% return here in DFW, let's say 5% on the whole 500,000. And so that is a $25,000 return per year on that $500,000, right? And that doesn't even include the compounding interest. We're going to keep it real simple. The point is, you can get either a 10% return on the 50,000 or a 50% return on the 50,000, right? Because of the leveraged investment. And the idea there is, when you are looking at buying a home, that's what you want to focus on. And so when you're talking about how much do I put down on a home, if you look at it that way, it may help you make some different choices, because you got to pay to live somewhere, right? And there is value in the pay a lot down, debt free, right? Let's say you pay cash. Well, if that's where you're at, you're going to get a 5% return a year. You pay cash, you're getting 5% appreciation on the leveraged investment. So that's going to be actually annualized about 4.5% a year. So the way to do it is to really put less down, as far as to make it where it's affordable for you, right? As long as you can cover the payment, lower down is a higher return, right? And so look at it that way. It's important to keep cash. Remember, do what the banks do, not what they tell you to do. It's better for them when you pay more and do shorter term loans. They have lower risk in that situation, but you, especially in Texas, cannot get your money easily accessible. You need liquidity for opportunity or protection, right? There's two camps, debt-free and wealth creation. Used to be a big debt-free guy until I went through the financial crisis, and then the several years after with my clients. And so many of them hit hard times, even those that had tons of savings. And then when they wanted to get access to their money, they couldn't, right? Some of them is because of medical situation, or a spouse died, or a massive job loss, and they, survived for a year or so, and then they needed their money, but they couldn't qualify for it. And then they were forced to sell in a down market. I don't want that for you or any of my clients. And so when you look at this, keeping liquidity, less down, higher return, and look at it as the leveraged investment that it is, then you can see this as the financial instrument and help make different choices that keep you in control of the money, right? The more you give to the bank, the higher the risk. I hope this is helpful. If you have any questions, give me a call. There's a little sheet here attached to this video to help explain and give some details on the ROI concept as it relates to buying a home. And of course, if you want to discuss further, that's what I'm here for, and that's what the team is here for. Appreciate you. Happy hunting out there, and we'll talk to you soon.